Hi, let's make a brief technical and fundamental study on MCZ. This is the chart since the IPO in 1999, and the stock has been trading in this wide trading range between about $0.50 and roughly $1.7. Over the medium term, well, the stock had this bearish trend here from 1.7 to below 0.5, but now it is coming back. It is bullish now with the 50 days moving average above the 200 days moving averages, and so the trend is bullish now over the medium term and certainly over the short term. And the stock had this nice bull run in anticipation of Q1. I don't know if it was Q1 earnings. Let me check that. Anyway, the last quarterly earnings, and it has since then it has been stuck in this trading range between 112 and 1.45. Let me see where it is now. It is at $1.24, and the low today was 116. Let's check my fundamental my valuation model for the next 3 years. Well, I still had the share price here at $1.21. It is at $1.24 now. The initial share count is 54.24 million shares, and I expect a dilution factor of 1% a year going forward. That has been the story here. Let's go down here. Well, since 2002 the share count has remained more or less stable, so I expect just 1% dilution per year, which gives me 55.9 million shares for 2009. And the initial revenue, this is the revenue the company had over the last 4 quarters. It was 99.7 million, and I expect revenues to grow 12% a year going forward. This is the last quarter's growth rate, 12%, which gives me a final revenue number of 140 million for 2009. Initial net profit margin, this is the net profit margin the company had over the latest fiscal year. It was 3.7%. Yes, and I expect this to expand a bit to 5%. I'm not being very optimistic here. The company has been going through a very tough turnaround, but it has been very successful, so perhaps it will be more than 5%. And this gives me final net income of $7 million or 13 cents per share earnings. And if we apply the industry average earnings multiple, which is 29.92, let me show you that here. For MCZ, this is Toys and Games, and the industry average PE is 26.92, as you can see. And this gives me a final estimated share price for 2009 of $3.37, or a share price compound annual growth rate of 40.7%, which I consider very attractive. And the optimal selling price given this is 2.16%. This is the price where the stock would start returning less than 16% a year. So this is the optimal selling price today, 2.16, and the stock is at $1.24, so definitely I consider it very attractive. I actually held it before, but I was shaken out about here. It was really a shame, but I wouldn't mind buying it higher now. These Q1 numbers were very pleasant. So on a 1 to 10 scale, I give it an 8, and I like it very much. Thank you. Bye.